Hi, and welcome to this week's episode of the Stockscores Market Minutes. This week, I want to talk about what I really believe is the best indicator for stock traders. And it doesn't matter if you're a longer term position trader, a medium term swing trader, or a short term day trader. I'm going to show you some specific examples of how this indicator works and alerts you to the kind of stocks that make huge gains in a relatively short amount of time. But before I do that, I want to delve into the theory behind the indicator, because if you don't understand that, you won't understand why the indicator works so well. So the reason stocks make really big jumps in price, I'm talking about the stocks that go up, 100% in a day, 500% in a week, 1,000% over a few months sometimes. These stocks do that because they have significant fundamental change in the company, or at least the perception of it. Oftentimes it's a news release that will drive the market action, get people excited. Sometimes these stocks go up and then they come right back down again, but this indicator will help us get in early and then also get out if the trend is broken. So when a stock has significant fundamental change happening, maybe it's a news release, maybe it's a rumor, maybe it's promotion that's being done on the internet, what will happen is the group of people that are closest to the company, those who follow the stock the closest, they'll buy first, and they buy the stock aggressively. So you have a situation where nobody really cares about the stock. It's just sort of trading in its normal pattern. And then all of a sudden you get this abnormal price move with much more volume than usual. And so we can say that the stock has abnormal price gain and abnormal volume. And this kicks off the strong upward trend. And it happens, I would say 95% of the time, stocks that make these strong market-beating moves start their big moves with abnormal price and abnormal volume activity. So what I did 20 years ago is I developed an indicator that looks for abnormal price and abnormal volume. I call it an action candle. It looks for action in the market. What it's actually doing is using linear regression to look for abnormal behavior in the market. And there's a little more to it than that, but that's the essential element behind this indicator. So it looks through the entire market. I have a website, stockscores.com, which looks for this on the daily time frame. And then I've created the indicator for a program called TradeStation, which I'll show you in a moment. I have nothing to do with TradeStation. It's just a program that I use. But this program allows us to create our own indicators. And so I created this indicator for TradeStation a long time ago, and I've been using it year in, year out. It really helps us find the stocks that make the big gains. So to summarize then, stocks move, they make the big moves because there is the perception of significant fundamental change. So when traders learn of some new information, they buy aggressively, and this leaves a trail to follow. My action candle indicator follows this trail by looking for abnormal volume and abnormal price gain. And the best trades happen when there is an action candle breaking from a predictive chart pattern. So I'm going to show you a couple of examples from the last little while. So this is a swing trade, and wherever you see a candle, this is a candle chart, wherever you see a candle with a pink and yellow dot, so these are pink and yellow dots. Anytime you see a pink and yellow dot, that is an action candle. And that means that there was abnormal price movement with abnormal volume. Now, I don't really care about this one, and the reason, or this one for that matter, because those two are not breaking from low volatility. What I mean by low volatility is boring sideways trading. So here you've got an action candle breaking from boring sideways trading. Now that was on Thursday of this past week. The stock was just a little over $1, and the next day it hit 440. So you've got a 400%, a little more than 400% gain in 2 days. Now we can apply it to a longer term time frame as well. This is a daily chart of VOR. Now you'll see there's a pink and yellow dot there, pink and yellow dot there. There's one right here and then a bunch there. You'll also see that there's some pink dots. Pink dots are what I call a message candle. They're not as important. They occur when there is an abnormal price gain, but without abnormal volume. And we use that in another circumstance, which I can explain in a future video if you like. All right, so What's important here is we have low volatility, boring trading, and then an action candle breaking from low volatility. Here we had an action candle, and it's not bad for low volatility. It was sort of in this, what I call a pennant pattern, and the stock did do fairly well from there, moving from 70 cents to $1.50, so I guess that's 100% gain. But this is where it really made its massive move. There was abnormal price, abnormal volume, and then look at the stock and how much it gained. Now I'll show you one more example at the end of the video, which I did on a day trade this past week, where we're going to look at the exact same thing, but on a 1-minute interval. This is a daily interval. The previous chart was a 13-minute interval. And if you learn how to use this particular indicator, you can really identify those strong stocks early. Now, before I get into this week's market analysis, we're going to jump to the Stockscores website. And I'll just show you here, if you want to register for my free weekly newsletter by email, you can do so right there. Just click on that See More link. I send out stock picks. My picks from 2 weeks ago have had really strong gains in the last 2 weeks, and I'm using that same methodology to find them. Now let's get into this week's market analysis. First thing we're going to do is take a look at the S&P 500, figure out where the market's going to go. And remember, I'll come back to this concept of action candles at the end of the video when we look at the 1-minute interval for a big mover on the day trade on Friday. So you can see here the trend is up, the bottoms are rising, and that means optimism is in place. It's slowing down a little bit, but the buyers are still in control of the S&P. On the NASDAQ 100 QQQ, very similar situation. So these are both bullish charts. On the IWM, which is the US small caps, it's also in a bullish trend. It has resistance here, it has resistance here. Unlike the large cap markets, it's not breaking to new highs, but it is getting better, and we're definitely seeing a pickup in the trading action in those small cap US stocks. Let's take a look at the Canadian market. T.XIU is the symbol, and here you can see the trend is up, just like the large cap US stocks. The trend is up as well. Now the pace of the trend is slowing. It certainly was a lot steeper here when the market bounced back from the tariff crash. This was when trade wars took over and the market got a little spooked, but we've taken all that back since then. Taking a look at gold, GLD, it's been in a sideways range for, I don't know, almost 3 months, I guess. And it does have rising bottom, so that's encouraging, but it's kind of neutral in the short term. It's consolidating long-term gains. If you look at the 3-year chart, you can see just how much gold went up. Just by the way, this was an action candle on gold. It had abnormal volume, abnormal price movement, and that led to the big run up. And you can look for those on with the Stockscores market scan if you're a member of Stockscores.com. All right, let's take a look at, we'll take a look at silver because I know that's a popular thing these days. Silver outperforming gold. You can see it broke out of this little range right there. So that's looking pretty good. I want to take a look at the 3-year chart. It's a good upward trend, getting up near the top of the channel here. So you can see up, probably get some resistance there and roll over. I would buy silver on weakness. I don't think I would chase it here. Let's move along to the US dollar, which has been ugly. You can see the steady downward trend in the US dollar, mostly because of trade wars and tariffs and that sort of thing. If we look at the 3-year chart of the US dollar, it is at a long-term floor here. So it should bounce. It should break this downward trend line and bounce. But until it does, I think we want to be pretty negative on the US dollar. How about Bitcoin? It actually had a decent week this week. This is the daily chart. It's been in this sideways range for a while, but it broke out on Wednesday this past week and moved up nicely from there. And that's been a catalyst for a lot of the day trades that we've seen in the short-term market. Good gains on Bitcoin and general crypto-related stuff. Let's take a look now at the bond market. TLT is the symbol. And you can see that the bond market has stabilized over the last 6 weeks, but it's still in a long-term downward trend. It's just stabilizing short-term. If we look at the 3-year chart here, you can see that it's really in that long-term downward trend. And until we break this cycle of falling tops, it doesn't look like interest rates are going to fall. We need this to break that downward trend line for interest rates to start to improve. So let's take a look at my ratings then. Bullish on both time frames for all stock markets. Gold and oil, I'm neutral. I didn't look at oil. We should just jump back and I'll show you the oil chart here. Let's just do that quickly. USO is the symbol and pretty much neutral. You can see that we are just in this choppy, sideways, very volatile range. But when you look at the 3-year chart, it makes a little more sense. We've been stuck in this range underneath resistance there, bouncing off support anytime it comes there. We're in the middle of the range. It's not really an exciting market. All right, so neutral on oil. US dollar bearish on both time frames. Bitcoin now bullish on both time frames again. And bonds neutral on both time frames simply because it's at that long-term support zone. It should bounce, but we don't yet have the sign that it is bouncing. So let's take a look now at the day trade of the week. This was a stock from Friday. It's one we found in my active live service, and all I did to find this was look for action candles on the 1-minute time frame. So I'm running my algorithms in this program called TradeStation, and members, active trader members of Stockscores are given my action candle indicator amongst others, and this is what we use to find it. So here is the trade of the week on INKT. The stock was active in the pre-market, but coming into the open, it was fairly quiet. Remember I said we want breaks from quiet, boring trading. And then look, action candle, action candle, action candle. The indicator telling us that abnormal buying was coming into the stock. And so we picked it up just after the halt right here. It got halted there for 5 minutes. So picked it up after the halt, and big ramp up, moving from, I think it was around $27 up to $58. So that was the first move. That was a double. And then it pulled back again, and it made another action candle breaking the pullback. That's another strategy I teach called the intraday pullback strategy. And I had a little break of that downward trend line. I made another move from 50 to 73. So that was another 50% gain. So all of this revolving around a very simple concept of looking for abnormal activity from low volatility, abnormal price movement, abnormal volume. It's my favorite indicator. I've been using it for 20 years at least, the action candle indicator. It's an awesome thing. And if you want to learn more about how to get that indicator, you can check out stockscores.com. If you've enjoyed this video, please hit the like button. I hope you're subscribed to the channel. It always helps to see more subscribers coming in. And if nothing else, I hope that next week you trade well.